Unrivaled Nation, I'm excited to talk to you about my next potential multi-bagger. This is an exclusive video just for Unrivaled Investing Journey subscribers. That means you if you're watching this. So what's the goal here with potential multi-baggers? I'm trying to find companies with a strong or unrivaled value proposition. That's the basis of the name of this channel. Ideally, you're unrivaled. If not, do you show signs? Like, what are the telltale signs that you have a strong or growing value proposition? Usually it means you're doing something that is attracting the more consumers to interact with you, or you're taking share, or you're growing faster. And this is the key one. This is one of the key ones I use that almost always is a good signal for, hey, there's something interesting going on here. There's an industry being potentially upset. Is there a player in this industry that's growing way faster than their competitors? Let's say than the legacy, than the incumbents. The obvious question, and I've mentioned this in several videos, is there significant upside over time? Are you looking at a market that could be, 10x? Could the stock 10x from here? And I show a picture of one of the longest runways in the world, where it's sort of this comment of, I'm not just looking for things that just go up 70% in a year or something like that. Like, yeah, it's nice. Like my last multi-bagger's up quite a bit, and I've had a few of my potential multi-baggers go up something like that in a few short months, and that's nice and all. But at the end of the day, that actually makes me a little squeamish, just because when you see that sort of growth, oftentimes it's the valuation expansion versus the underlying fundamentals driving it. So I feel more comfortable when I'm thinking, hey, you're growing 20, 30, 40% a year, and the stock just moves along with the fundamentals growing, and it's not like you get this quick, fast forward your returns because the valuation expanded. So that's, but at the same time, if I find something with a long runway and it has what I notice is a low valuation relative to U.S. markets, where things are crazy expensive, or at least many stocks, in my opinion, are on the more expensive side of things. Then I start getting interested. So the telltale signs of taking market share, growing faster than the incumbents, tapping into a big market, the potential to be 10x, over time, and just years of potential operating, and maybe, the optionality to expand or grow faster, tapping into new markets. Let's go into this. What is the multi-bagger for this call, for this video? And so for this company, I'm calling out Mercari. It's a Japanese company. The ticker, so you can, so there's two things. So I prefer, I've mentioned this before with Bioscience, which was my December potential multi-bagger, and that's a Canadian company. Right now in particular, I think it's super important to have a global perspective on your portfolio, partly because of how the US has mishandled COVID and how our deficits have gone crazy. And so there is that concern that at some point you sort of have to inflate your way out of the debt, and if you inflate, it means that you're effectively debasing your currency, in which case maybe some other currencies hold up better, or at least some other situations hold up better. And there's also the possibility that looking abroad, you're actually able to get better discounts than what you can get in the US. That's a double-edged sword, though, because you might find that, abroad results in, you don't get the same sort of hype, so things don't get pumped up quite as much. So Mercari, as we look at it, the ticker in Japan is 4385, but if you don't have the access to buy it in on the Japanese exchange, you can buy MCARY, which is an American depository security, which represents one American depository security for every 0.5 ordinary shares. So that's around 27 bucks a share. The Mercari is around 5,700 yen, so there's about 103 yen per dollar at this point. I personally use Interactive Brokers. It's not perfect, but my experience is it's better for international exposure than several other platforms. I had previously used Fidelity, for example, and in all honesty, I think they use international securities is a great way for them to sort of milk their customers, and I've sort of seen that firsthand in terms of how they trade these things. But that's an aside. So I broadly, I'm pleased with Interactive Brokers in terms of how they treat me. I think their customer support and trading platform could be a lot better, but that's a whole aside. So what is Mercari? Mercari was run by founder and CEO Shintaro Yamada. After graduating from Waseda University, Shintaro Yamada established Uno, where he launched various internet services, including Movie Life, Photozuo, and Machitsuku. In 2010, he sold Uno to Zynga. So that's a company that a lot of people are familiar with. After leaving Zynga, so he spent a year or two there. He went on a trip around the world, so he had some money, went on a trip around the world, and then shortly afterwards he established Mercari, where he sort of saw, hey, there might be this better solution, make it easier to create value in a global marketplace where anyone can buy and sell. And this is a focus on consumer to consumer transactions, so consumer to consumer marketplace. And so the Mercari app, which was founded in 2013, focused in Japan, is a consumer-to-consumer marketplace where individuals can easily sell used items. We want to provide both buyers and sellers with a service where they can enjoy safe and secure transactions. Mercari offers a unique customer experience with a transaction environment that uses the payments Mercari holds in escrow and simple and affordable shipping options. Many sellers enjoy having the items they no longer need purchased and used by buyers who need them, and buyers enjoy the feeling of hunting for treasure as they search through unique and diverse items for lucky finds. In addition to buying and selling, users actively communicate through the buyer-seller chat and the like feature. So this is a mobile-first focus on consumer-to-consumer selling effectively used goods, established in 2013, well after eBay, which is sort of the name brand that people have associated with consumer-to-consumer goods. In the US, they sell for about a 10% commission. So this isn't it's free to use the app, free to list stuff. They only get their cut on the commission, on the deal. And the key theme here is that, going back to their mission, creating value in a global marketplace where anyone can buy and sell. And that's a key takeaway, and you'll see why in the video shortly. But, in terms of the treasure hunt, it really is sort of a smorgasbord of potentials, whether or not it's baby goods, car, interior goods, cosmetics, men's clothing, ladies' clothing, entertainment. It covers everything here, sports and leisure. So you can see it's pretty well diversified. This isn't like Poshmark, where it's tackling, Poshmark is a clothing consumer-to-consumer, platform. This is consumer-to-consumer marketplace that almost anything goes, and for that you are more diversified in terms of your potential. Now, who's looking to use it? And so here are a couple of examples that they use. Where one is effectively elderly looking for something to do. Where Miss Hikawa is the daughter of a woman in her 80s, a seamstress who has run a sewing factory for 60 years. After her father, who ran the sewing factory with her mother for many years, passed away, and her mother retired, she thought she needed to help her find a new passion in life. That's how her mother started selling clothes in Mercari. My mother made a beautiful dress out of a kimono, and when she sold it on Mercari, people started to buy and comment to thank her and give her their opinions. My mother said that if they are so happy with it, she'll just have to keep sewing. This has given her a new purpose. So it's not only used goods, but it's also just the potential to sell new goods that consumers are creating. So it's not just a used goods platform, it's consumer to consumer. That's really the way to think about it. But here's one outlet for the elderly. Another aspect that you see common is the older folks are saying like, hey, I don't need all this stuff. Let's get rid of it. Let's clean up. Another is an aspect of an outlet for creativity, and really it's all ages. And here's an example of Karari Endo. She's saying she's a heavy user. She's been using Mercari for about 4 years, selling smartphone cases made by herself. So this is a product that she's made, and buying mainly beauty and other everyday items on Mercari. If you're an independent creator, Mercari is the best way to sell your work. Mercari users respond very well, and they show their appreciation the most. So it's really fun and exciting. So look, it is an outlet for creators to sell stuff, as well as people just sort of cleaning attic and saying, hey, I no longer need this stuff. So you get the full range of potential here, but they're trying to make it as easy as possible for you to sell your goods. And how have they done? You're probably thinking, well, this is probably an eBay type business. It's probably very sluggish growth over time. But they've crushed it. Like, wow, look at this growth over the last few years. Effectively triple over the last 3 years in terms of the GMV, or gross merchandise value, that's going across their platform, as well as the revenue, both nearly tripling in the last 3 years. These figures are in billions of Japanese yen. You divide by 100 about to get the US dollar figures, but you can see like, wow, this is interesting. Like this this makes me think that, you're smelling something interesting. You're on the right path to potentially finding something that's unrivaled or that's disrupting a marketplace enough that they could become a key player. And the reality is, being unrivaled, having a strong value proposition, they start going together where, hey, finding a marketplace, finding an opportunity set where, let's say, there's only 2 players that can compete or 3 players that can compete, that can still turn into a very good opportunity long term. That's very different than a hyper commodity like oil where you're a price taker. This is a situation where you're saying, hey, here's this 10% cut and we get whatever goes through our platform. Very different unit economics that you're going to see on this, and we'll talk about that in a second. And so then, right now, Japan is over 80% of their business, over 80% of the gross merchandise value that goes through their platform. And you can see how it's growing. Even in their most recent quarter, 21% user growth, 17.5 million users on their platform. The amount of business going through their platform up significantly. So this is, I'm looking at this and I'm saying, wow, this is really interesting that they're able to still deliver on this, that they're still posting up this growth. And this is just their Japanese segment where they were founded. So they, look, I would expect them to win here because they are focused on it. They were founded here. They might have some cultural knowledge, but is there really potential for them to do this globally? Because that was sort of the founder's statement of, hey, can we do this on a global perspective? And look at what they're doing in the U.S., where in the most recent quarter, the amount of dollar, and this is in U.S. dollars, was up 165% year over year to 290 million versus 109 million, and it's been growing fairly rapidly. So their U.S. ops are really taking off, quite impressive. Now, I would expect this to potentially moderate in the coming quarters, as they introduce a slightly higher take rate, as now there's like effectively a processing fee in addition to their commissions. So there might be a little bit of pushback. So now their take rate might be closer to 14% versus the 10%. But either way, if you're still having meaningful GMV, that should result in sort of hyper revenue growth potential there, because that's a noticeable take rate increase. So this is an interesting setup. The fact that they're starting to succeed in the United States, the Mercari app, that's another, this is smelling even better. There's definitely potential here. This 165% growth. The first thing is do you think the competitors are growing anywhere near this rate? Let's see what they're doing. And for example, look at Poshmark. Recent IPO. Posh is the stock primarily focused on fashion and clothing. They grew in their most recent quarter 39% year over year. So well under the rate that they're growing at, that Mercari is. Look at eBay. Now keep in mind, Mercari US ops are only 3% the size, so 3% the size of eBay, but they're growing at 5x the rate. And eBay, arguably had some sort of COVID benefit. People are staying at home saying, oh my gosh, I got to clean out the attic, or I got to sell this, maybe this will help make ends meet. But, you look back a year prior and they had really negative growth. They were declining, year over year. And, you see that negative 6% in gross merchandise volume in the U.S. And this is a period where they were growing and have been growing. So I see this as they're doing something special. They're chipping away at eBay's slice of the pie, and maybe you make the pie a little bit bigger. I mean, look, eBay's still growing 33%, so it's not like it's a fixed pie and you're all at the poker table saying, hey, I hope everyone makes money. This is an expanding pie, and maybe they get more of it than eBay over time. They chip away at eBay's share, but they're doing something special here. That's what the data says. Then the question is, why are they doing something special? What is special about them that is resulting in Mercari growing 5x faster than eBay? Now, of course, eBay has size on them, so that's a key aspect. But is Mercari doing something special? Because longer term, the faster you grow relative to competitors, that means you're going to be taking share. That means you might have something that's unrivaled relative to your competitors. And so, there's a couple of aspects here. Let me shrink myself a little bit. So, one aspect, and this is really interesting, is they, it's once again focus on their vision of make it so easy that anyone can sell, whether or not it's a good they create or a secondhand good, a good that they're selling that's used. And so here it is in some of their, and they're slowly launching out into individual markets. They're saying 1 in 4 of the listers in San Francisco where this service was launched, which is Mercari Now in June 2020, select Mercari Now, which is same day delivery as a shipping method launched in Manhattan. As the shipping method, 1 in 4 listers in San Francisco are choosing this. This was subsequently launched in Manhattan and Brooklyn and New York, and they see this is an example of a disruptor coming into the marketplace saying, how do we make this better for all the users in our ecosystem? And they're like, let's partner with Postmates so that way we can enable same day delivery for these goods. I mean, that's incredible. You can think about that value proposition. The sooner you get the good, the sooner you can get you paid, the sooner everyone can leave their reviews, thumbs up. Then another thing, and this one really blew me away, is that they have an agreement with UPS where you can, effectively you get a QR code. You don't even have to print out a label. Bring the good that you want to sell, and they take care of everything for you. So it's like you just have to have your phone scanned, and whatever item you want to have shipped, they can package it and they can mail it off, and they'll tell you the cost and everything then and there. So that is incredible. What is sort of being built out, like how seamless they're trying to make this for the user, for the sellers. And then, another aspect of trying to make it easier for the sellers is this automation, demand prediction, saying, hey, here's how much supply we have, here's how much the demand there is, and this is what, this is the type of pricing that we could think. So that way, the likelihood that items listed will actually sell is extremely important to sellers. Added demand prediction, a feature that predicts supply and demand for popular items to the seller dashboard to help users sell items more easily. Like this is exactly the type of stuff that resonates with sellers, to say, hey, you are making this so easy for me that of course I'm going to go with you. Of course I'm going to go back to you. And what do the reviews say as we look at them? And keep in mind, I picked out the ones that mention Poshmark or eBay, but broadly speaking, no matter what I pick, you're going to find unfavorable ones, that you look at, and of course there's going to be even more recently unfavorable ones because of the price hike in the U.S. But the key message is 4.8 stars. That is one of the highest rated shopping apps out there. But to read some of the things that people have said, I've used other apps like Poshmark, OfferUp, Craigslist, and this app is by far the best. The selling process is simple and streamlined and doesn't require you to meet with anyone in person. Poshmark is more of a social selling app where you have to get lots of followers and participate in selling parties, etc., which was stressful and overwhelming. Poshmark was something I had to constantly keep up with because the app notifications were nonstop by the dozens every 10 minutes, notifying me of new followers and likes and selling parties I could join, and I never made a single sell. Mercari is so much simpler. You just post an item and someone buys. They walk you through step by step what to do once you make a sale, from packaging to printing the label and exactly where and how to ship. If you have a question or an issue, the customer service is friendly and efficient with their response. Mercari is actually a lot of fun to sell on. I have made quite a bit of money selling everything from clothes to jewelry to home decor to makeup, brushes. You can pretty much sell anything you can think of. They offer great protection for the buyer as well, with many opportunities to make sure you don't get scammed. They hold the money in limbo for 3 days until you make sure you get what you paid for. 5-star app all around. Thanks, Mercari. Now look, of course there are reviews that are much worse than this. The 1-star of like, hey, this product sucks. I bought it and then it didn't work after a few days. I hate you, Mercari. But it's like, wait a second, like this is part of the app ecosystem. This is part of, consumer marketplace. Another review, this app is everything that eBay used to be. Rarely any Chinese sellers with cheap goods have infiltrated. I rarely use eBay anymore because this app is just so much better. An application is good when a real person goes out of their way to leave a good review. All the mechanics are so useful. Being able to be notified when items that you really want are put up. The message center being easy to use and much better than that weird eBay emailing type thing. And just generally being an easier to use and enjoyable application. I window shop for hours on the site, and that's far. I mean, this alludes to the treasure hunt aspect that they've talked about. I window shop for hours on the site, and that's far. I've bought probably about 25 things and sold 2 through this app, and I haven't gotten burnt yet. Fingers crossed. My brother uses this application multiple times a week as he is a vintage game collector. It is seriously one of my favorite applications that I've ever signed up for. I'm a simp for Mercari. I only hope that one thing will be changed in the future, and he talks about we could send photos through the messaging app. It would be much easier to message a seller about bundling items if you could just provide a screenshot of listings. That's my only complaint. So like, it's not perfect, but by and large, this sounds like a stellar review. And as I mentioned already, if you go to Google or you go to Apple App Store, you're going to see that the aggregate reviews are very high, 4.8, 4.7. But you could find occasional one-off complaints. That makes sense for being one of the top apps out there for shopping. So what are the long-term margins of this business? They're clearly investing in the U.S. ops right now to try to get that scale, take market share, have revolutionary or incrementally better products that result in taking market share. But, if you look at Japan and how they've done in Japan, there is some data here that makes you think their margins long-term could be very attractive. Recently in the last year, their operating margins in Japan have ranged from, 29% in the most recent quarter, and that was depressed because of a one-time bonus, to as high as 42%. So I would say long-term 20 to 40% is very feasible, maybe longer-term 20%, if you have concerns about competition from other players. But Japan is penciling out 30% plus this year. That's their goal, and they view Japan as a stable business where they're rocking out. So this bodes well, and it's also, it's a key. I love the business model, the attribute where you can have one business that's profitable, and then that business subsidizes a different geography. And that game has gone on over and over and over again throughout investment history. Once again, I refer to John D. Rockefeller, where he would use one geography to subsidize another geography, and you'd push down refining prices in one market, and then you'd crush it and acquire everyone, and then do the same again in another, and use the profits from one market, make another market artificially, cost ineffective for other players to operate. You squeeze them out. And you saw the same thing with C, where C had and C's one of my top positions. You have this very profitable gaming operations, their Garena ops that are subsidizing their Shopee apps, so that way they can grow faster. They don't have to raise outside capital. You have a very similar dynamic here, where you're using their profitable Japan segment to look at international expansion, primarily focused on the U.S. right now. But longer term, wouldn't surprise me if they succeed in the U.S. Could they start rolling out in other countries, especially given that the U.S. is already a very competitive country to operate in from an e-commerce perspective. There's a lot more to this story. I want to provide an overview of Mercari. But there are some other things that I'll just touch upon here, that like Merpay, where it's effectively fixed. It's effectively buy now, pay later, or an installment payment plan for their Japanese segment. Change the repay amount over time, switch to fixed amount payment after shopping. You can choose which items to use the fixed amount payment with. They've had some challenges here, but broadly speaking, like this is their way of increasing their value proposition to buyers. I'm not sure why they wouldn't go directly with a partner like a firm on something like this, but hey, if they could do it themselves, great. And even more to the story, where they're talking about how longer term, as they get more and more data on how the marketplace works, they want to actually work directly with the manufacturers, with the retailers, so that way they could say, hey, these are the goods that retail for a second time at a higher value, and these are the components that make it worthwhile. So maybe having some sort of clear identifier, so that makes it's easier to track, or here's the packaging, or here are the types of units that ultimately held their value longer. So it's ultimately this is part of management's long-term goal of, hey, how do we make sure we have this sort of ecosystem where it's easier to sort of reuse items over and over again. So it's this reuse, repair, upcycle. You have the consumption, but it's easier to continue this. So that way, after someone's done with an initial good, you could pass it on to the next person. They can pass it on to the next person without wear and tear, or what were the problems that they've generally seen. So it's an interesting idea, but that's more of a medium to longer term vision of like, hey, directly working with the suppliers and manufacturers for incremental changes that they can make. What are my thoughts on the valuation? Well, there is a reason why it's a potential multi-bagger, and I call it out for having at the end of the day, what I'm penciling out is over 200% upside, down, 20%. Now this is the framework I'm using. Of course, it could go higher or lower. Recently it traded at 5,700 yen, which is around 900 billion yen market cap. So the way to think about it, this is sub $10 billion valuation. So you can see that they did about 48% growth in fiscal 20, and keep in mind their fiscal 20 ended in June 2020, and then fiscal 21, penciling out, this is a range based on how they've done so far of 40 to 50% growth. Maybe it comes in lower, but this is a ballpark figure. What's the long-term margins? Given the fact that Japan has been 30% plus, maybe this is too conservative, but I wanted to put a range here because US is a fast-growing segment, and they are going to be facing more competition from the likes of Poshmark and eBay. So here, 20 to 30%. Their tax rate of 25%. That's a ballpark figure. You could tweak that higher or lower. But either way, for a company that's growing, let's say 40 to 50% this year, and penciling out a valuation range of 30 to 50 times, that starts smelling pretty interesting. That's not dirt cheap, where it strikes me as reasonable. This smells interesting. I like the fact that you're owning something where you're dominating in Japan, you're growing at 30% plus. In the U.S., what you would think is a saturated market, they're growing at over 160%, so that smells really good. Then they either have the they have the conviction to raise prices, which probably means that they have some sort of visuals in terms of, hey, we think we're going to continue to grow at a good clip. So, the growth rate beyond fiscal 21, penciling out 20 to 35%, maybe that's too high, maybe this is too low. I try to put out a reasonable range of what this could look like in the years ahead, and what do I think the end multiple could be. Now, keep in mind, the biggest factor that drives multiple, I feel like, when you come, 5 years down the road, is what's your expected growth rate at that point. At that point, are you still expected to grow at a good clip? So it's really, when you're thinking about these multiples, you should be thinking, well, in years 6 through 10, am I still going to be looking at a potentially great growth rate? And if they, if they successfully, continue to roll out in the US, I would expect that growth rate to continue to be at a very attractive rate, and then people to be getting pumped up about additional opportunities. I'll talk about that in 1 second. If the US doesn't work out, then you start having a little bit more of a challenge. The valuation could be lower, and then it's sort of like, well, how do you just milk this asset that's growing in Japan, and maybe at that point it's only growing 10, 15, 20% a year. But either way, 20 times, that's effectively a 5% yield plus an asset that might be growing 10%, so you're getting a 15% return. That might be pretty interesting, especially if you are the dominant consumer-to-consumer app in Japan, or the one that's rocking out in Japan. So I've started, as I've alluded, this is the potential multi-bagger pick, my most recent one. I've started a position in Mercari. It's between 3 to 4% of my portfolio. Part of which is like, look, I want to see them execute. I want to see them prove themselves. It's not a 20% position of my portfolio. And look, the stock is a little overbought right now. It has gotten bid up a little bit. But look, let's take a little perspective on this. Despite getting bid up, you're looking at a company that's growing at 40 to 50%, that trades at, on a forward multiple, 7 to 8 times forward sales. There are companies in the US that trade at similar growth rates, that trade at multiples of their sales. So multiples of their sales valuation. So I look at this and I think, wow, the Japanese market here, this could be a potentially hidden or an overlooked gem relative to what you see in the U.S. market, where things honestly feel picked over a lot of the times, unless you're looking at some one-off special situation like a recently announced SPAC deal where it's like, hey, here's a 200% growth company and it's only being valued at 10 times earnings or something like that. So I look at this and I'm thinking, this is interesting. I like this setup. Could it go down from here? Yes. Could you have a lousy return over the next 5 years? Absolutely. And starting off with a 3 to 4% position gives me that that optionality to leg into the position over time. I as I've alluded to several times, I'm very skeptical of the U.S. markets in particular. This stock, Mercari, has gotten bid up a little bit, but I see big risks for the U.S. market in particular. So, could you have a dramatic sell-off that results in all markets selling off? Absolutely. I mean, that's generally what happens is correlation goes to 1 and everyone just pukes. And so the stuff that's cheap internationally just gets cheaper. But then in the recovery, that's the stuff that really does well. So I look at this and I'm like, look, this is a starter position. It's not just a starter position. 3 to 4% is a reasonable allocation of my portfolio. If I never add to it again and it's just organic compounding, that might be a very satisfactory return if it's if they continue compound at 30-40% a year. And look, I would be eager to add more to them if it becomes super obvious to me that they are going to really win in the US. If their quarterly GMV is billion plus versus a couple of $100 million, then I'm like, okay, you're really winning here. And keep in mind, if you win in the US, then they're like, oh man, they beat out, or they're beating some of the serious competition in the US. Does that create the potential for you to sort of copy a playbook or say, hey, this management team was astute enough to figure out the dynamics of the US. Hey, could they copy and paste that internationally and figure out how to roll that out? Maybe you pick it in London or the UK, or you pick it out in Europe or South America. So could you get a re-rating even higher based on that international potential, if they continue to execute? So I like this setup. I like this story. It's a 3 to 4% position of my portfolio, 7 to 8 times forward sales, depending on their long-term optimized margins, somewhere between 30 and 50 times, next year earnings based on an optimized margin figure. So that strikes me as pretty interesting. It's an interesting setup. I haven't covered everything here, but there's a lot here. And for example, with the international potential, your international has to start somewhere. And they talk about recently their cross-border sales, and I'm going to mention C again, where they started collaboration with Shopee, the Southeast Asia and Taiwan's largest marketplace, in August 2020 to strengthen the cross-border initiative in Taiwan, where they're creating new demand with high-price items that were effectively slow-moving in Japan, but then sold really quickly on Shopee, like luxury brands, character merchandise, idol merchandise, video games, where because the geography, they're pretty close, hey, all of a sudden there's demand in Taiwan for these goods, based on Shopee. So, they are putting their toes in the water to figure out how do we cleverly, expand with international, markets or international sales over time. So I like what they're doing here. I'm excited about it. I judge them 1 quarter at a time. If I'm wrong about it, it's 3 to 4% of my portfolio. If I'm right, it could be an attractive return. You could see what I'm penciling out here. I might, the 3 to 4% does give me in my mind some room to buy more if it sells off, because it is a little bit overbought. It did get bid up a little bit. But look, I still, once again, as I start off at the beginning of this is a long-term journey. I'm not looking at day trade. I'm not giving you daily updates. Oh, yeah, buy this, sell that. No, I'm trying to think of this super long runway of like, oh, we're heading into that very favorable direction. I can see this runway being, a multi-bagger from here. And this does have that potential. Like if they succeed in the US, then I think this 200 could be conservative, because then people start really thinking, wow, this is exciting. Devil's advocate, though, I'm sort of ping-ponging here, but devil's advocate is like, well, wait a second, this is a Japanese company primarily trading on a Japanese exchange. You're not going to get the animal spirits that you're currently getting in the US. That could, ping-ponging back, you could say, well, wait a second, maybe in the future Japan, does start getting animal spirits and starts getting the same valuations that the U.S. does. So it can go either way. But that's, I'm sort of painting, an overview of Mercari. There's even more to the story, but I feel like I've covered sort of the key points. This is my most recent potential multi-bagger that I'm calling out exclusively for you, the Unrivaled Investing Journey subscribers, Unrivaled Nation. And I'm grateful to you for, well, first of all, watching this video, sticking through it, for subscribing. Thank you so much for subscribing. And I'm grateful to be on this journey with you. Thank you so much for watching.